Let me tell you a story. Once upon a time, there was an investor that paid more than $50 per dot. Now we are at $4.51. Is this potentially an opportunity to buy low and sell high, right? That's in the end the goal. Let's have a look at the fundamental reason why Polkadot did so poorly in the last years. And let's try to find out whether or not this could change. So here we are at $4.51. And at some point we were above 50. Now what we're seeing over here is also a Polkadot chart, but it's slightly different. It's Polkadot relative to Ethereum. So by dividing the dot price by the Ethereum price, we take away the ups and downs of the market. We look at idiosyncratic movements, and that went from top to bottom down by more than 93%. Because this is how crypto in general works, right? When Bitcoin goes up and when Ethereum goes up, then the altcoins tend to go up as well and vice versa. So by dividing by the Bitcoin price or by the Ethereum price, we can actually see, does it make sense to own an altcoin? Does it make sense to take on more risk? Because when you take on more risk, you should also get more return. In the past, this has not been the case for Polkadot. But again, is this potentially the turnaround? Let's first have a look at why the dot price actually underperformed Ethereum that much. I think it has a lot to do with token inflation. There's simply more and more dot tokens that get issued over time. And currently we are roughly 1.5 billion, but that will increase over time because of the staking rewards. So if you currently stake your dot tokens, you get an APY of 16.7% or 15% after commission. Let's say you did this in the last 2 years, you still would have underperformed buying and holding Ethereum quite a bit because the price went down by 64% roughly. And so that's the problem, right? Where not all of the tokens are circulating, but quite a lot of it is staked, is locked up, then just a bit of additional supply can depress the price disproportionately. Here is the number of dot tokens that got staked over time. It seems to be growing over the long term, and that should be positive because the more dot tokens are locked up, the less circulating supply there is, the higher the price should be. Again, the fundamental idea being that price is a result of supply versus demand. When supply decreases, demand stays stable, then the price should go up. But just because more dot tokens got locked up for staking doesn't necessarily mean that the circulating supply went down. Because check this out. This is a different representation of the same thing. This looks at the percent of dot that is staked over time. And that actually went down. It went from 62% to currently 58%. The inflation of dot tokens will be roughly 15% in the next year. So there will be 15% more dot tokens. If we now assume that roughly half of the dot tokens stay staked, so the staking will not increase and will not decrease, then those 15% additional supply will probably again depress the price relative to other cryptocurrencies by 30%. So I do believe that this trend here will prevail. Now there is a bit of an issue here, right? Because sometimes we do see temporary rallies that aren't too small. 60% over here or 80% over here. And so finding the right entry for a short position isn't that easy. On top of that, this is again the relative valuation chart. So if we just short dot relative to the US dollar and then say Bitcoin and Ethereum goes up, then dot will also go up. Maybe not by as much, but it will still go up, right? Just compare those two charts. This is the same kind of Polkadot chart, but this is relative to Ethereum and this is relative to the US dollar. Shorting relative to the US dollar is way more risky. But there's a way actually to short relative to Ethereum or say relative to Bitcoin. I personally have a lot of those short positions open. I do believe that a lot of altcoins tend to underperform Bitcoin over the long term. Polkadot isn't that different. And I don't share every single position that I've opened here on the public YouTube channel. This is what the premium membership is for. But I do want to share how to find such positions. So you go to defilama.com, you go to the borrow aggregator, you go to basic, and then you say, what kind of asset do you want to short or do you want to borrow? In this case, it's dot. And over here in the DGen protocols, we can see that we can borrow dot tokens on the Venus protocol, on Moonwell, on Prime, on DForce, on Starlay, and on ApeSwap. So fundamentally, the way this works is you borrow the token, you've got a loan denominated in that token, and then you swap it against something that you're comparatively bullish on. So in this case, this would be, for example, Ethereum. Then you wait for a while, you wait for DOT to depreciate versus Ethereum. Once you're happy with your gains, you lock in those gains by swapping the Ethereum back into DOT, and you don't have to swap back everything because again, DOT depreciated versus Ethereum. The Ethereum that you have to swap back, that's used for paying back the loan. Again, the loan is denominated in DOT, and the remainder that you've got left in Ethereum, that's then the pure profit. If this went a bit over your head, that's no problem, right? There are dedicated tutorial videos again on Premium. If you've got a crypto portfolio that's above 6,000 US dollars roughly, then you should be able to make your money back simply just opening similar short positions that I have opened. If your crypto portfolio isn't yet at $6,000, then there's also the free Telegram. So the link to the free Telegram is as well down below. Looking very much forward to seeing you there. That's 100% free. Cheers.